Good afternoon, everybody. My name is Lorena Sorrentino, I'm manager at CSR Europe, and together with my colleagues Maria and Spiros, I'm happy to welcome you at this roundtable where we will be discussing the future of corporate sustainability reporting. Just before looking at the agenda, I wanted to remind you some technical details. So you will see that on the bottom right corner of your screen, there is a button, live discussion, that you can click on, and a window will pop up, and it will be important for you to make the best use that you can of the chat function, where you can interact also with other attendees or leave your comments, or also, for example, leave links to activities and initiatives that are linked to the topic that we are discussing today. But also you can use the tab on questions, where you can pop your questions to our speakers, to ourselves as well, of course, but also you can make use on a very interesting feature that is upvote other questions, so that we can make sure that we ask the questions that are more interesting for the audience as a whole. So let's look at the agenda before starting. So today our purpose is to discuss together with you how sustainability disclosure is evolving in light of recent and future regulatory requirement, and together with the stakeholders and companies that have agreed to join us today, also let's say try to understand how and what future-proof disclosure looks like, discover best practices also from the companies that will join us today, and discuss together how we can move forward on this agenda. And we are very happy to have with us Mr. Lucius from the European Investment Bank that will give us a keynote speech after my introduction. And then we will move to the panel, where we are very happy to have Tata Consultancy Service, Enel, and Titan. So as you see already on your screen, before starting with going deeper into the topic, I wanted also to, let's say, give a few words about CSR Europe for those of you that are not, let's say, so familiar with our network. So as you see on the slide, we are a network that is composed both of companies. So let's say the group of logos that you see on the left-hand side of your screen from different sectors and from different geographies, but also national partner organizations. So national networks on CSR that are active at local level in all European countries and a little bit also beyond. And also we are very happy to be collaborating with a number of partners that you see, let's say, in the last two rows on the slide, with who, let's say, we collaborate on ad hoc projects, including indeed the European Investment Bank that is with us today, but also the UN Global Compact, academia, like the University of Lund, and other kind of stakeholders with who we interact on an ongoing basis. If we move to the next slide, you will see a bit, indeed, the composition of our network, as I told you, corporate members, national partners, and also partners, associated partners. And here now you see, let's say, our three major areas of work. Of course, today the discussion is around what we call markets. That is the pillar on the right-hand side of your screen, where we support companies in their journey towards what we call a total impact disclosure approach that, of course, looks at disclosing about financials, but of course, help them reporting in an effective and efficient way on ESG matters, and also including a very important topic that is tax. But of course, we work also on other topics, and you see them on the side. So we have a bunch of projects around what we call people. So projects related to how we can help companies in the transition of to the workplace of tomorrow, in terms especially of promoting lifelong employability. And also we have a series of projects and work around sustainable value chains, where we also tackle, let's say, the environmental aspects of sustainability, including climate action and circular economy. In the next slide, if you move to the next one, you also see a bit recapped our leadership model. We are a platform of practitioners. So our first in our work is to help companies embedding and mainstreaming sustainability into their business model and services, also facilitating peer-to-peer learning, and an opportunity is also now during the summit to do so, to learn also from your peers and front runners in the area in order to scale up action through collaboration and reach the systemic change that is needed also through a number of actions related to advocacy with the European institutions. So now we can actually move to the topic of today, that is the future of corporate sustainability reporting. And we wanted to speak about this because, as many of you already know, this year 2021 has been characterized by what we call an avalanche of new measures. And of course, an important moment was in April with the publication of the proposal for a CSR directive, so on corporate sustainability reporting. Of course, with all the changes to the NFRD that this includes, including on the scope that might be enlarged, on the quality of information to be provided, on the format, but also with the introduction of the concept of double materiality. And you see here on this timeline also we try to put together all that has happened since the beginning of 2021, and also looking a bit to 2022, also because in our work with companies, we always try to anticipate what is down the line in order for them to adapt to these changes. And of course, let's say if in all this plethora of initiatives, we should select the 5 top most important legislative measures that you should keep an eye on. We can move to the next slide. You see that we have identified, of course, the Corporate Sustainability Reporting Directive, coupled with another important discussion that is happening at European level, is number 3 on the sustainability reporting standards that indeed will identify the type also of information to be included in the reporting. Then, of course, number 2, the taxonomy, a part of that work with the delegated acts on climate mitigation has been already, let's say, put forward and has been concluded, but the work will continue with the other environmental objectives and will continue even further with the social taxonomy afterwards. And on this topic also tomorrow we will have a very interesting high-level plenary that you are all invited to join around the topic of sustainable finance as such. Going back to these initiatives also, it's very important, let's say, to keep following the evolution around the EU due diligence law that is bound to be published on the 27th of October as part of the bigger package on corporate governance. And last but not least, the country-by-country reporting directive, where an agreement has been reached last June and where the discussion will continue around, let's say, this other very important dossier that for us has become part of the discussion around the transparency of company in relation also to the sustainability agenda. And let's say, if I, let's say, would like to pass one message around that also in the way we work with companies, of course, there are different measures out there, and especially in the last months, we have been let's say, we have received so many information, but the important thing and what we would like to see is that for companies, it is critical to address all these measures in an integrated way, so that you don't address them slice by slice or in silos, but that companies manage to have an integrated approach also in order to organize their teams internally to approach these measures in integrated approach, also because this doesn't have to be considered only a tick box exercise, but really a means for companies to accelerate their business transformation and to reach the objectives that they've set for themselves. So at CSR Europe, and we can move to the next slide, we will continue, let's say, in our work of advocacy, of course, and intelligence to provide companies with the latest information on how the landscape on policy is evolving, but also with a number of activities and ateliers and master classes where we try really to help companies moving towards a more effective and efficient way of reporting. So I will conclude it here so we can leave more space to our speakers, and it's my pleasure to introduce our keynote speaker, that is Mr. Lucius from the European Investment Bank, and we are very happy to have you with us also to hear from you what is the take of the European Investment Bank on this, and how you are planning also to support the companies and stakeholders on this journey. So please, Hakan, you have the floor.
Thank you, Lorena. Pleasure to be here. Thanks for having me, and thank you very much for the invitation to speak on sustainability reporting today and tomorrow. I'll go from generic to specific. If we think of sustainability reporting as part of the corporate reporting in addition to financial reporting, let us remember that the financial reporting has taken 400 years to get to where we are. It started 4 centuries ago with a Venetian monk, Luca Paciaroli, who actually invented double entry accounting. And it has taken decades and centuries to develop, refine, improve, and to come to where we are. To come to a place where we have got a multi-billion euro industry of accountants, of auditors, of companies implementing and actually reporting on their financials. And yet it wasn't always like this. It took a financial crisis, an economic depression. 100 years ago, in the 1920s, companies were not reporting on their financials. People were buying and selling stocks without really knowing what it was that we were buying. Not even financially they were knowing it. And then it took a huge crisis, after which the world changed and it was becoming obligatory to disclose financials. And today, we are also having a crisis. We are having a climate crisis. And if I may add, we are having a biodiversity crisis, together with many other challenges. And that's why it's so obligatory now that we move ahead with sustainability reporting, and it becomes part and parcel of a corporate reporting. Because you cannot manage without measurement, neither the company internally, nor the investors externally, nor the stakeholders. You must know what you're doing. You must know the overall picture. And sustainability reporting, where we are today, is inherently eclectic, diverse, and difficult. We know the criticisms. The criticisms are sustainability reporting is not coherent, it's not consistent, it's not obligatory, you cannot compare. At best, you can compare the company in itself from the year before, but not between two companies. And I don't even know what is green. So this has to change. And that's why I'm so proud that in the European Union, we are leading the way. We are leading the way in defining what is actually green. So if you're an investor, you know what you're buying. If you are a stakeholder, you know what you're talking about. And if you're a manager, you actually have a guidance about what is sustainable from an environmental point of view. And our Commission friends are doing a fantastic job. They have been working on this for so long. And in the whole plethora, Lorraine already mentioned quite a number of these initiatives, taxonomy being one, are doing and setting up a very important framework, which is going to be there for the future because we desperately need it. It's time. We need it now. And at the European Investment Bank, as the bank of the European Union, we have been always attempting to be at the forefront of sustainability reporting. When there were general voluntary guidelines like GRI, we used them since the beginning. SASB framework, we use it since 2018. And we have done much more than that. You can even today go into our website, and for each investment we do, you can see what is the carbon footprint of that investment itself. And we've been doing this for many, many years. And in that sense, a lot of my colleagues have also been involved in the work of the European Union. They have been working with the TEC since the beginning. We are on the Sustainable Finance platform. And personally, I'm very delighted to be also on the EFRAG, where we're working on the European Sustainability Reporting Standards. And here, let's be very clear. Sustainability reporting is so different than financial reporting. Because first of all, what is your unit of measurement? In the financials, it's currency, it's euros. You know my profit is so many euros, or my loss is so many euros. My balance sheet length is so many euros. And everything is in the same unit. It's in euros. But what is your profit or bottom line in terms of environment, of planet? What is your bottom line in terms of people, of social? It's multidimensional. And that makes it inherently difficult. Measuring climate is one thing, measuring air pollution is one thing, measuring water is another thing, measuring biodiversity is a completely different thing. What's the unit of your assets about people or stakeholders? And all this needs to be honed out and needs to be sharpened. And it's a humongous amount of work. And I'm confident that it will evolve as we go along, but we must have a solid framework which is consistent and comparable, and go ahead with it. Remember that also financial statements are not directly comparable, despite having worked on them for 400 years. The profit of one company can change depending on what standards you use. So we need unified standards. And let me just wrap up the basic principles we are working on in the EFRAG, on the European Financial Reporting Advisory Group, to do the European Sustainability Reporting Standards. And let me highlight four dimensions to outline the future. First of all, let's be clear, we're working on the sustainability reporting, which is now not called non-financial because it's more, and we have to look at it positively. So we're moving from the non-financial reporting directive to the corporate sustainability reporting directive. And I think already the name gives you the positive spin in this. And within this, first, we will include SMEs in the EU sustainability reporting landscape. That's very clear. Size is not a question. It's really about measuring and managing your sustainability. And second, we will have sector-specific sustainability reporting. I just said how difficult it is, that the units of measurement change. And indeed, if you are a CO2 intensive sector, it's very different than if you're in a labor intensive sector. What is important for your reporting can be very different. There is no one size fits all. So we will have sector specific sustainability reporting, and that's the second message. Thirdly, we will acknowledge the importance of intangibles in sustainability reporting. And this is the point. Most of these dimensions are intangible, and they definitely are not in the financials. And that's very, very important. And fourth, last not least, I must emphasize double materiality. And let's be clear of what we mean with that. The first materiality is, what is material for the corporate in terms of sustainability challenges that have an impact on the corporate's own profit and operating performance, right? But it doesn't stop there. And I think this is the important aspect we're emphasizing. What is the corporate's effect on planet and people? It goes the other way around as well. So we have this two-way street, and both are equally important. Sometimes they overlap, but not always. And that's why this very major principle will be a part of the European sustainability reporting as we are discussing and going forward. So I do very much look forward, and I hope we will not take another 400 years. We don't have time for that. We must do it within years, not even a decade. Go ahead, have clear sustainability reporting frameworks which make comparability and consistency clear for all, and move forward because we're running out of time. Thank you very much, Lorena.
Thank you, Hakan, for your intervention, and indeed, not only for telling us a bit how the EIB has always been at the forefront of sustainability reporting, but to share a bit the challenges and what you're working on as part of the EFRAG group. And yeah, thanks also for sharing this urgency. Indeed, we don't have for 100 years to wait. So it is very important to get also the framework right. Now I will leave the floor for to start the panel discussion, and therefore I will leave the floor to my colleague Spiros Perikleos that will introduce the next speakers and facilitate the discussion. Spiros, you have the floor.
Thank you, Lorena, and thank you, Hakan, for your intervention. Hello, everyone. My name is Spiros Perikleos, and I am part of the CSRD Europe market team, where we deal with the area of sustainable finance and, of course, sustainability reporting. And I will be the moderator for today's panel session. Now, I would like to start with presenting our guest speakers for today. We're really glad and honored to have three corporations and three organizations that they engage a lot with CSR Europe. And I would like to start with Srinivasa Kumar Yershuru. He leads the industry advisory group of Tata Consultancy Services in the banking, financial services, and insurance business units. And he develops Tata Consultancy Services' point of view on the current issues in the aforementioned business units. Afterwards, we will have Giulia Genuardi, Head of Sustainability Planning, Performance Management, and Human Rights. Giulia was a member of the European Lab Project Task Force on Climate from EFRAG, the European Financial Reporting Advisory Group. And of course, she is currently now a member of the Project Task Force on the preparatory work for the elaboration of the possible EU sustainability reporting standards. And last but not least, Maria Alexiou, our very own member of CSR Europe's board. She serves as a senior ESG advisor at Titan Cement International. And Maria as well was part of the project task force on the reporting of non-financial risks and opportunities and linkage to the business model. And she is also currently a member of the project task force on the preparatory work for the elaboration of possible EU sustainability reporting standards. So I would like to welcome all speakers. And first, I would like to give the floor to Srini. Srini will share with us some insights on the future of the reporting landscape and also his experience at Tata Consultancy Services. Srini, the floor is yours.
Thank you, Spiros. In fact, thank you all for giving us this opportunity to participate in this event. TCS, as you know, is part of the Tata Group. And Tata Group, as you know, is very much anchored in the larger societal purpose. And especially on the environment, there's a lot of work that we at a group level do and contribute to. And TCS also has been an initial adopter of the best practices in this space. So thanks for the opportunity. What I will do in the next few minutes is to give you a set of perspectives on what I see and TCS sees as the future of sustainability reporting. And I think we had a very good beginning with Mr. Lucius' speech. And as he said, the financial reporting is a long-standing, well-established practice. And for sustainability reporting to reach there, it will take time. So the first implication of that for all the organizations is to recognize that this is an evolving space, not a very established space. It will change very significantly over the next few years. But at the same time, also recognize that the time that we have to take action is also limited. And we need to have a very decisive and forward-looking action to save the planet. Now, if you look at the current challenges that we have in this space, we have a very good framework in terms of the various standards, processes, right, the reporting mechanisms, etc. But if you look at the challenges, if you just hit an enter on the slide, if you look at the challenges and the way we address these challenges, right, you have a lot of issues. The major complaint with corporations is that data availability is an issue, right? And in fact, when it comes to sustainability related stuff, 30 to 40% of the data that is needed was never sourced before, leave alone the data inconsistencies and imperfections, etc. Now, Our advice on this particular aspect is that never try to reach data perfection. It's a myth. We need to figure out ways of working with what we have at hand and leverage the technology and various mechanisms that we have, alternate resources, etc., to actually make it work. And second thing is, we recognize that we live in an evolving regulatory framework and an evolving sustainability situation, and the time to act is now. So do not wait for mandates to evolve in various geographies. Take a proactive step and be the forebearer of the torch. The third thing is, supply chain view is missing in most of the context, right? And especially when it comes to the materiality benefits, etc. Engaging across the stakeholders is very important, and a supply chain view is very, very vital. And the many benefits will come only when you actually are able to integrate the whole thing across the supply chain. For example, you take scope 3 emissions. Now, it's important to understand the upstream and downstream and integrate the whole accounting of that into the overall flow for you to arrive at the correct numbers. The fourth dimension is, the issues with lack of standardization. And it's very heartening to see that CSRD has done a great job in this so far. They have gone a long way. And in fact, I would think that CSRD framework has to be taken as the broader framework and harmonize the rest of the things based on that. And it will eventually integrate the sustainability reporting into the financial reporting as well. Now, on the aspect of technology leverage, there are 4 key technologies which will become very, very relevant. First is the cloud. Second is the blockchain. Third is the artificial intelligence and machine learning. Essentially, because we are talking of different aspects. One is the ability to get large volumes of data together, where cloud will help. The ability to process that data at higher speeds, where your machine learning and AI/ML will help. The third is to establish correct lineage of data across the supply chain and avoid double counting issues, where blockchain will be very, very handy. So with that, we'll move to the next slide. So keeping this in the mind, we proposed a framework which is having possibly 3 steps, right? First is to standardize, second is to integrate, and third is to engage. So what you see here is that in terms of standardization, it's important to have authoritative data sources that the firm should have access to. And second thing is, it's important to have full set of stakeholders involved in the entire process, so that you have the complete subscription across the value chain, across the supply chain. And you can use various mechanisms like surveys, your advisory mechanisms, panel mechanisms, etc. Integration comes from multiple technology leverages that you should have. And more than anything else, it's important to also, from an approach perspective, to integrate the non-financial aspects with the financial aspects eventually. Today, it is not yet clear as to how you would infuse the sustainability reporting on measurable financial terms. It will evolve over a period of time, where intellectual, natural, social, and other forms of capital are also measured up and reported in a much more sophisticated way. And the last element on this slide I would like to highlight is to say that engagement is very vital. Engagement with the stakeholders, right? And ensuring that you produce the relevant output to the relevant stakeholder. Each stakeholder has different perspectives that are of interest, and it's important to present them with those perspectives which are relevant to them. If we move to the next slide, where I have just tried to present a matrix of how the stakeholder expectations vary, right? See, the reality is, as we go along into the future, the expectations from the stakeholders also is becoming more and more sophisticated. And even from a consumption of reporting perspective, they want multi-channel access, and their needs are evolving. And it's also therefore important to have a reporting framework which is audience-led, which is purpose-driven. And I think those factors have to be incorporated into the mechanisms that we will use for reporting in future. I'll move to the next slide to quickly give you in a few minutes an example of what we have done for some of the largest financial institutions across the globe. This case actually is from one of the largest in the globe. The drivers for this firm was essentially to start with regulatory compliance, but then they recognized the need to stay ahead of the competition, to stay ahead of the curve. So they have embarked upon a journey for sustainability. And what we did in this is to first define and contextualize the various components of sustainability. That's what you see as the horizontal strip at the top. So you recognize that there are various elements, all the 5 pillars are represented there. So what we are doing there is a holistic assessment of what is the impact across all types of sustainability requirements. And then we created a framework for double materiality assessment based on, we identified which of the UN SDG goals are relevant to this particular firm. And then we carried out a materiality, we are carrying out, in fact, creating a framework to carry out the materiality assessment. And see, the key aspect here is it is a very intense process to engage with all the stakeholders. And even in TCS's own exercise of reporting for sustainability, we moved from a separate sustainable report into an integrated reporting a couple of years back. And if you see our annual report now, it has integrated the sustainability impacts into the overall report. And what we learned in the last couple of years and with this financial institution as well is engagement with stakeholders proactively is very essential. And that's the key part of the solution. Then we actually are in the process of developing the solution architecture. And you see the reporting frameworks that we will eventually build. So what we realized is in the materiality assessment, climate is the biggest component. We are building a global dashboard, and this we estimate is at least a 2 to 5 years journey that the institution will have to carry out into the future. So just to wrap up the key messages, the value of sustainability is beyond compliance, right? It's almost an existential reason for which we have to take it upon us to actually ensure that we preserve the planet for the future. And the reporting has to bring all the aspects that are related to that to the fore. And therefore, we need to use a very inclusive approach. Don't wait for mandates. We need to embark on a proactive basis, right? Reporting is at a very nascent stages in terms of requirements formulation, the lobbying cost, etc., etc. But then being proactive is very important. And it's important to build it into the DNA of the firm, right? And these are the things which will actually make you ready for the future and then sustain the sustainability reporting into the future through a collaborative engagement with all the stakeholders. So in conclusion, I would say the window is closing. Let's act. Thank you, Spiros. I'll be happy to take questions as we go along in the discussion.
Thank you, Srini, for the presentation. Indeed, action is needed. As we go further into this sustainability journey, maybe just to follow up with you, Srini, you mentioned a lot about the engagement with stakeholders and the importance of meeting stakeholders' needs. And as you presented also in your stakeholder needs matrix, we've seen now the future needs of stakeholders. I think it will also be interesting to understand what has been changed maybe in the past years and how stakeholders' needs are shifting for the future. Maybe could you give us some insights on that?
Yeah, the stakeholder needs are changing from an intent perspective as well, right? If you look at it purely from a financials perspective, there is an intent to know, because if you're not compliant, where would it lead in terms of the fines that you'll have to face? And then it has in turn a financial impact on the organization. That's one dimension. But more and more what we see is, especially during the pandemic in the last 2 years, people have become very cognizant of the importance of sustainability. And various stakeholders are actually asking for, not just TCS, even the clients that we work with, they're wanting to know how are you fulfilling the purpose of sustainability for the future. Mandates, compliance, metrics are one thing. But from a philosophy perspective, are you oriented towards the good of the planet for the future? I think that's an unsaid expectation which is there as an undercurrent.
Thank you, Srini. Now, if we could move on to our next speaker for today, Julia. Julia will share with us a sort of state of the Corporate Sustainability Reporting Directive and all her work on this very important regulatory framework that will come into force into the next couple of years. Julia, the floor is yours.
Thank you, Spiros. I said, first of all, that thank you for your invitation, but thank you for the two previous speech, because we have many messages that are really important. First of all, I can say that you can't manage anything if you don't measure. It is absolutely true. Because measurement allow us to define exactly the baseline to create our roadmap to a new sustainable business model. And Srini said that don't wait for mandatory regulation. So it's absolutely impossible that we wait really the regulation on this kind of topic. I can say also that we spent 400 years to define a financial regulation. We haven't 400 years. We have more or less 2 years to do that. And we have more or less 10 years to reach all the sustainable development goals. So we are in a really challenging period. If I may, I am a little bit scared for this kind of period, because we are focusing on reporting that is absolutely fundamental, because we have to measure exactly as we said before. We have many different input. We are moving for sure in the correct direction, but pay attention that this is not a compliance exercise only. It's a fundamental important movement of the company to change their business model, to change their approach to risk, because we have to remember that sustainability allows us to identify the so-called weakness signals that will be material in the next future and allow us to reduce the risk of our business model. So we are working on that, because we know very well that the competitiveness of the company in the next future will be based on sustainability. And if we don't work on sustainability, we will not have the landscape to do that. So we have to preserve the future, because we have to have something to manage in the next future. So I know that are simple words, but it's important that we focus the attention on our purpose, because we are speaking many times about metrics, about reporting, but it's fundamental that we have in our mind exactly the purpose, the purpose of our work, because sustainability reporting is the starting point. With the sustainability reporting, we know very well the business of the company. It's our output of our sustainability action, because through the sustainability report, we create trust, we guarantee transparency. But we have to work considering our roadmap in the next future. If I focus on the CSRD, so I totally agree with Akan when says, fortunately now we haven't the word non-financial, because non-financial is something different, respect financial. It is not something that is integrated or embedded in the business model of the company. Now we are using the correct word, sustainability, but we have many problems to define sustainability, because it's not true that all people consider sustainability in the same way. Is exactly the issue that we have in this kind of task force where we are working. Maria knows very well exactly the same thing. So we are many experts in this moment that are working on sustainability. We use different angles to see the same thing. So it's not easy work in this moment. So before compare the performance of the company, we have to define the same thing in the same way, using the same metrics. For me, it's not a problem that we will use different metrics. We will use different currency, different unit, but it's important that we use the same. Probably we can guarantee the comparability exactly considering some sector-specific measurement. And then we can add other business to that. But with the new CSRD, we have one important message that is related to the forward-looking data. It's absolutely fundamental, because when we play the joke of the sustainability, we have to play the joke in the next future, not in the past. So for the first time, we have information that can compare the company in their roadmap. If you consider Enel, for example, if you consider our energy mix today is not representative, you can't appreciate our work. You have to appreciate our work if you will see our energy mix in the next 10 years. Because probably today we are at the same level of other companies, but other companies haven't defined a specific plan to change their energy mix in the next year. So I think that with the CSRD, with the forward-looking data, we have a great opportunity to do that. But it's another challenge, because now we haven't a specific framework, a specific reference to define target, to appreciate if the targets are challenging or not, if to verify this kind of target. But this is exactly the other starting point. Another element that is really important are the SMEs. SMEs are fundamental element of the landscape of the company. If you consider, for example, Italy, in Italy, we have many SMEs. If we don't consider in this kind of process SMEs, you are canceling more or less the 70% of the company around the world. So it's absolutely necessary that SMEs are in this kind of process, but it's absolutely true that we have to introduce SMEs step by step, because sustainability is important, but it's also important to guarantee the financial sustainability of this kind of SMEs. We have to go directly to specific KPI, to real material KPIs. It's not necessary that we have a book of many hundred of KPIs. It's absolutely important that we share a vision and we define in this moment, this kind of KPI are really important. And we add in the other years, other KPIs in order to cover the entire world. Another element is exactly the double materiality. Double materiality is a challenge, is fundamental, because as Hakan says before, we have to measure not only the impact of the external environment on the company, but we have to measure also the effect of the company on the external environment. But pay attention, because it's not an easy work. It's a really difficult work. We have to consider that we have something that is material in general, but when we measure the impact, we have to consider that we are working in a serious way. Because the risk of greenwashing in the definition of the impact is absolutely high. Because we have two opposite interests. When we measure the impact of the external on the company, normally we say, yes, we have a big impact. But when we measure the impact of the company of the external, we say always we have a low impact. In some cases, correct, in other, no. So the measurement of this kind of part, the measurement and the process of the definition of the double materiality is absolutely fundamental. We are in a moment where sustainability is something serious. It's not greenwashing. It's something that is absolutely fundamental. We have to be rigorous in the application of the sustainability. And for this reason, it's really important that we have common metrics and common language. The last two elements, and I conclude, are exactly digitalization, that is strongly linked to the concept of corporate reporting. We are speaking about sustainability report, financial report, governance report, many other reports. We have different regulation around the world. We have many approach that the company use. I don't think that is the fundamental element that we have to follow. We have to focus attention on measurement sustainability of our business model. It's not important the document that we use. It's important that we are clear with our stakeholder. Srini says before, it's absolutely important to engage our stakeholder, but we have to engage our stakeholder using the correct language, using the correct metrics. It's absolutely impossible that we engage community using financial words. because they don't understand this kind of thing. And sometimes they think that we are really strange when we speak using this kind of word. So we have to consider that we are in the same level, sustainability report, financial report. It's not an issue. It's not a fight between financial and sustainability. We are working in order to guarantee transparency, in order to create trust, because if we create trust, we will have investors and the stakeholder that will work with us for many, many years. And stakeholder engagement probably is the big missing that we have in this kind of CSRD, because we haven't a strong focus on stakeholder engagement. We have a strong focus on double materiality. We have a strong focus on many, many different things, but we haven't a specific chapter that is dedicated to stakeholder engagement, that is the core of the sustainability. And I conclude with a message. I don't want to say that GRI is the best in the world, but to all of us that work on sustainability for many, many years use GRI, because GRI is really the most complete standard that we have in this moment. But GRI use a fantastic, for me, principle, that is the principle of balance. And we have to use this kind of principle in all the activities that we put in place. We have to present positive impact and negative impact. It is exactly the concept behind the double materiality. With the balance, we can engage correctly our stakeholder, because we, in this way, we don't create greenwashing or blue washing as you want. And the balance is another principle that say we have to balance a report using the same metrics, considering the relevance of the topic. It is absolutely important in order not to create encyclopedia, but create something that it's really useful for us as a company in order to explain our business model, and also for the stakeholder to understand how we work. And digitalization probably will help us to create different road to engage our stakeholder and to focus the attention on the real material topic that we have. Always with an angle and with a view and with a lens on the future, because sustainability, sorry if I repeat, is exactly the work that allow us to identify the weak signals that will be material in the next future. So thank you very much.
Thank you, Julia, for the rich intervention. I think you've shared a lot of interesting elements regarding the new directive. You touched upon sector-specific standards, SMEs, double materiality, digitalization, stakeholder engagement, and also, of course, the language and the metrics on how to transfer this approach. I see a very interesting question related to what you've shared with us on double materiality, and I'm glad you also mentioned GRI. A person from the audience would like to know, if we talk about double materiality and state it as impact of the organization of ESG topics and vice versa, what do we put on the axis?
Sorry, Spiros, I lost your question.
So the question is really, when we're talking about double materiality, so the impact of the organization of ESG topics, and of course the double materiality, if we can make it into a matrix, how would that look like with the X and Y axis?
Yes, I think that that double materiality is absolutely important, and we have to use and to really disclose our double materiality to our stakeholder. It's not an easy work because probably the most common materiality matrix that we have is not the best way to communicate the double materiality impacts that we have. I don't know. It's not easy, but I would like to stress a message that it's impossible to perform an ESG double materiality. So we have to work on double materiality, that is the double materiality of the company. It's absolutely really difficult to separate some industrial or business activities or material topic respect the ESG. If you consider, for example, in a practical way, renewable energy, for you, renewable energy is something environment or is something that is business? It's both. So it is important in this kind of double materiality that measure the impact in an overall concept. And another element is that financial materiality is inside this kind of concept. It's not something separate. Because when we evaluate the impact, it's impossible that we don't consider also the financial impact. Probably it's not easy. Probably we haven't any metrics that allow us to measure all the impact that we have. And an element is exactly the concept of intangible, because in this moment we don't measure intangible. And so we have some lack of information about that. But I think that the message should be, we have to change a little bit how we present the double materiality. We have to include all the impact that we know in this moment, but we have worked so hard in order to guarantee that we will measure all the impact in the quantitative way and not only in a qualitative way.
Thank you, Julia, for the answer.
Thank you very much.
Now I would like to move on to Maria, as Maria has another session to join in another roundtable this afternoon. So Maria, please, the floor is yours. And Maria would like to give us a sort of an update on the next European sustainability reporting standards, and also how Titan as an organization, how it really integrates such a more dynamic approach in its reporting exercise. Maria, the floor is yours.
Thank you, Spiro. And I'm very happy that I have to follow up the other panelists in this room, because really I will build on what was already said. To start with, coming from a background of professional experience with the building materials industry, which of course, as already expressed, its sector is here and has first of all to see its own material impacts to start with. We have been working actually at Titan Group for almost 20 years now to build a global sectoral approach, because from the very beginning we had realized that this is a commitment we need to take. We cannot face sustainability by ourselves. We have to engage first of all with our peers in order to have common metrics, common methodologies, common platforms even to share the related to substantial impacts of our operations, and of course create a baseline that will help not only each and every company, also the sector. For us, this road has started back in 2000, started with the engagement under the UN Global Compact, built on the GRI when GRI was still version number 2, and there was nothing yet there as a supplement to the sectors. So the sector started its own trip to build sustainability standards related to an agenda that was identifying then in 2002 what is material for the sector. This is very decisive. And I would urge each and every sector to make the same exercise. It is really mandatory to see sectors building their own agenda for action, focusing on material issues. This is the best for all. Then we have been working in task forces to set up standards that will help the sector and help the companies in the sector to develop their own internal systems to measure. As Julia said, if you don't measure, you don't really know what is the issue. We cannot claim we know what is the material issues. What are the material issues if we have not measured the impacts? And for sure, if you go in a sectoral approach, both the global issues you have to face as a sector and the local issues that in many cases are common, particularly in our sector, the mining sector, issues like community relations and community engagement are prevailing. So in this sense, the sector has worked 20 years, but of course has not covered everything. And all the material issues are not yet covered sufficiently. And at this stage, what we are looking, of course, is how this global sectoral approach is fitting the new proposal for the CSRD. And we are glad that is fitting. We bear, though, the experience, not only of the sectoral standards, but also of the international standards. Because as already said, GRI and other international standards are very relevant to each and every principle we need to apply in order to achieve quality, first of all, in our reports. Second, comparability. Of course, if we don't have sector-specific standards or benchmarks, sector benchmarks, we cannot compare who is doing and who is really moving to the right direction and who is not. So in order to create the environment of a just transition, of course, we need to give all companies, all sectors, equal opportunities to adjust. The regulatory environment will be very heavy. And for companies who have not practiced this exercise seriously and with an authentic and strategic approach, might fail. They will not be able to confront because we start with the principles. What materiality means as a principle? Yes, you need stakeholder engagement. What standards are you using to establish a system in your organization to have a process or a system that you really engage with stakeholders and you engage with the key stakeholders and not the ones that are already your allies? There are critical questions to be answered by the principles. And actually, this report that we prepared and will be launched and presented the 3rd of November by EFRAG, that is focusing on how already we incorporate risks and opportunities in the business model to make it sustainable, is revealing that we have done nothing on opportunities. Nothing. We look, and even leaders, of course, look more on the risks and try to identify and understand the risks, but no, we have not explored sustainability yet as an opportunity. And I think this might be the major missing element right now from each and every one of us. But how we can approach this if we have not really measured our impacts, and we don't know right now what is the impact of each and every sector to people and community. We cannot do that. We cannot claim that we have scientific-based data to measure the social impacts on people and communities of each and every key sector of the economy. And this is a handicap. The other handicap is the level of maturity that each sector that is critical for the economy and will impact the transition process is engaged in the process to develop what is missing. The level of maturity and engagement of each and every sector, as of each and every company, is decisive. And for sure, one word that was missing from the panel and the earlier speakers was harmonization. At the same time, we need to understand the context we operate and the requirements of the transition process. We need to clarify what are the minimum safeguards that will be applied vertically, covering all companies, also in terms of size, because also SMEs will be expected and should be expected to commit to apply the minimum safeguards, because we need to create a fair playing field for all. So we need to ensure what will be the minimum safeguards that we will globally commit as, let's say, the definition of sustainable competitiveness, And from there, we will move to articulate not only the taxonomies that I believe that will be very useful tools in this marathon that should last less than a year, as Julia said before, to build the common standards within the European Union and help to relate these standards with the global environment. And I think the good part is that CSRD, as well as the other guidance documents coming from the EFRAG lab, acknowledge the existing standards that have a global applicability and they are used already by companies, including not only, for example, GRI and SASB, but also other standards like, for example, AA 1000 stakeholder engagement standard and other complementary and principles-based standards as relevant to CSRD and the way we will build this corporate transparency system, allow me to say, because what we create right now in Europe is a new corporate transparency system covering many different aspects, not only the core of sustainability. It expands, it covers governance, it covers social impacts, both inside companies, in the workplace, and outside companies, in the communities, in the market, in the supply chain. And of course, it expands one and very significant issue that allow me to say that leading companies have already acknowledged as a material issue, how we will incentivize employees to engage in the transition process and will have all skills and competencies available, and how we will, of course, build the competence we need for sustainability at the top level. Board effectiveness is coming out as a very material issue. So if we look to what studies tell us, is that we have already moved in the next page. It's not the issue of what the law says, it's the issue what we are ready to do. And at least what we can see within the Pact for Sustainable Industry is exactly the leadership, the examples of leading practices and how they can apply to other companies, but also from sector to sector. Because where we have created already a good baseline, as it was already said, not only with data, but also with best practices, with methodologies, with measuring tools, we need to share among ourselves. We have done a lot of work so far, and that's why we are here, because this is our approach also to the global sector approach. Collaboration is a prerequisite, and sharing with your peers, sharing with other sectors, sharing with other companies, and particularly with SMEs, it is an urgent call right now. Thank you.
Thank you, Maria, for your contribution. I know you have to leave in 5 minutes. That's why I want to follow up with a question. You've talked also about the harmonization element. That was one of the important pillars of this transition. What are your thoughts on the European standards in terms of, once they are more elaborated, what will happen to the other international standards that are currently being used from companies, not only in Europe, but also globally? Will that create a more of a complexity issue, or everything will be less clear?
I think any mature company reading through the Corporate Sustainability Reporting Directive as a proposal right now, but also in the architecture of the new European reporting standard, it will realize that we will continue using the standards we already use, making these standards our own systems, integrating standards and developing through standards our systems that allow us to drive our decisions based on data and best practices, either sectoral or global or regional or whatever you name it. Each company will put the bar in its own level, is there. So of course, digitization and all the new tools, technology tools we have will help companies, allow me to say, to make this happen. Just use the standards properly. The standards are there, the principles are described, not everything is analyzed. We have a lot of work to do more. That's why all the standard setters will continue to work. And we see now that mergers and acquisitions take place exactly because there are more to do. We have not finished with the standards. I can tell you, for example, for a lot of social impacts, we have not yet the measurements, so we don't have the standards. The more mature area within the area of social impacts is health and safety. And the reason is because this area is overregulated. Wherever you don't have this mature level of regulation, you have to build standards. Following the right measurements, follow the right analysis in order to develop the right standards. Imagine that for GRI standards to move from 0.2 to 3.1, it took 7 years, more or less. So it is not happening like that to create the standards that are missing, because there are still areas uncharted. For example, another topic that is coming up in the top of the material issues for each and every company is business ethics. And I am a lawyer, but I really provoke you all. Can you define what business ethics is about today? Because in the past, you had the national laws, and there you could see how you define business ethics in your country, and even the jurisdiction was coming out according to this law. Where is the definition of business ethics in the global environment? And how you will put targets to improve your business ethics by 2030. It's part of SDG 16. It is part of what you have to do in respect to good governance, how you are going to define it, with what set of metrics you are going to say, I will improve my business ethics in a global environment and very challenging environment. But in each and every day, we face a number of business dilemmas that are related with our business ethics. And they are different in each and every country. This is the reason also that the Corporate Sustainability Reporting Directive is global, is sector specific, but also goes to country level, because the company is expected to explain what I have to deal with, what I have to face. And this is the reason that you need to do the materiality properly. And I don't agree that you have to do it every year, and it is impossible. It is a tremendous load of work to do a full cycle of materiality assessment in 1 year. But what you have to have open is the stakeholder engagement process, and to have the feedback of your stakeholder system reported in order to showcase, to demonstrate that you see what is coming from your key stakeholders. You don't ignore what stakeholders tell you. And when what is coming up is really important, then you have to change the matrix for sure. But allow me to say that I think it's going to be a loss of effort if you try to do everything. And if you operate in like 10 countries or 20 or 50, how many people need to be employed in the sustainability department in order to have everything in place? But stakeholder engagement, as said already, is so important that you have to report how you do it, what standards you apply, and what are the outcomes, and how this outcome is influencing your policies, is influencing your targets, is influencing your materiality prioritization.
Thank you, Maria, for your answer, and thank you for your participation in our roundtable. I believe you have to join another one. So
sorry for that. It was a real pleasure for me to be here with you, and I will follow up with the comments that you will share with all the attendees.
Thank you, Maria. Thank you. Now, I would like to continue with Julia and Srini. And I'm also aware that Julia has to go as well in a couple of minutes, so maybe I could start with Julia. Julia, we've heard a lot about the upcoming directive and the CSRD. Now I wanted to touch upon the point of non-European organizations. How will that affect a multinational company that is not headquartered in the European Union but operates in Europe? How will that affect the reporting exercises, and what type of internal processes they need to change, adjust in order to comply with the new directive?
So I think that the new European directive will become exactly the main reference that we have, because will be the only one that is mandatory in this sense. The other initiative will remain voluntary. So it's absolutely normal that the new European sustainability standard will become exactly the point of reference. Also for another reason, that EFRAG is defining this kind of standard, collaborate with different international organizations. So I think that in this moment we have a process that is called the co-construction with, for example, with GERAI, with SHIFT in a formal way, but we have many interaction with SASB, with IFRS Foundation, etc., etc. So I think that exactly as many years ago, the integrated reporting directive in South Africa, we have seen as the first mandatory regulation that we had. I think that the European will be exactly the point of reference for all the companies around the world. It's absolutely true at the same time that we have other elements that are really important in different countries. For example, we have a strong regulation in US in terms of renewables, so it's absolutely necessary to present additional data in this kind of country. We have other information, for example, in Latin America related to diversity. So we have to make a cherry picking of other directives, absolutely normal, in order to cover all the aspects that we need. But personally, I'm totally convinced that if we focus our attention on our sustainable business model, this kind of thing will be something useful to guarantee a unique view of the sustainability. I strongly convinced that probably the detail of the European standard will be so high that will cover all the other initiatives that we have in this moment. If you consider, for example, IFRS Foundation, that consider another target that is related to the financial one, probably will be high level respect the European directive. So I think that the European directive will become also the backbone of other initiatives. So I am really positive about that. Because I think that in this moment we have the same need to create something that is common and something that is possible to use in different contexts with minor adjustment. So I think that this will be the framework, but it's my personal opinion. It's not easy for a multinational company. If you see, for example, our sustainability report of this year, we have decided to present the sustainability information across our business model and to prepare 3 annexes or 4 annexes that are the GRI Content Index, the SASB Content Index, the TCFD Content Index, and the World Economic Forum Content Index. So the message is always the same, but you have a lens that if you want to read the information using your angle, you can use, but the information and the storytelling of the company on sustainability is always the same. I give you the instrument to read as you want my performance, but the performance is important. It is only one. But we have to remember that the only regulation that will be mandatory and will be regulation will be the European one. So I'm totally convinced that the roadmap is exactly this one.
Thank you, Julia, for your answer, and thank you for joining us today in today's
thank you very much.
roundtable. Now, Srini, could we also get your perspective on that?
I agree with Julia. I think her perspectives are very well appreciated. And what we are also realizing as we work with global companies, right, who operate in multiple regions. In fact, one of the analysis we were doing, especially on climate change, not all the full spectrum of sustainability reporting, but on the climate change, what we realized is UK and Europe are well ahead, right, in terms of the formulation of the guidelines, the regulation, the understanding of the banks in the financial services space, and the efforts that they have taken, etc. They're far ahead compared to US, Australia, other countries. And if you take us, a company like TCS, our facilities are spread across the globe, and when we report the impact of our operations on the society, we cover the full gamut wherever we have large operations. We have delivery centers in Brazil and Peru, majority in India, we have in Europe. So that if you see our annual report, right, it elaborates all that. So I would think as it becomes a law, the subsidiaries also would require to report these things, right? They'll have to comply with the local mandates and regulations. So it will become an interesting thing to watch. How I also see that it's going to be a set of initiatives for a set of countries in Europe that we will see in the next 1 or 2 years. And once that evolves, how do you aggregate that across for a global firm in terms of assessing the impacts is interesting to be seen. It's a very interesting problem to address for us as well.
Thank you, Srini. Maybe for the couple of minutes that we have left, I'm seeing a question from the audience, and maybe I can address it to you since you're the only speaker left in this panel discussion. Now, one of our attendees would like to know regarding SMEs or smaller organizations that they employ less than 500 personnel, but they still would like to publish and engage in a sustainability report. However, it's not mandatory yet for them. What kind of report should they write, and what are the key messages, keywords it will be useful to share with external stakeholders?
I think Maria was alluding towards a lot of information with regards to SMEs. See, it depends on what industry they're operating, right? I mean, the metrics themselves are not yet finalized. We don't even haven't reached a point of what do you measure and how do you quantify it and how do you compare. So as it evolves, I think for now it could be qualitative, but I think as it evolves for different industries in the SME segments, especially the SME segments, maybe while we formulate the metrics itself, it's important to standardize them and then prescribe the mandatory ones in a more definitive way, rather than leaving it for interpretation and subjective reporting. I would think from a regulation perspective and from a policy making perspective, the effort has to be made to make it much more tangible and much more easier to measure for these companies. Because see, when it comes to an SME, what you have at your disposal to comply with such things is very little. And therefore, see, even if you look at large corporates which do the independent reporting today, there is also an element of verification by an audit firm. Not as much as what you do on financials, but it is still there. So when we formulate these mandates for SMEs, I think we also need to keep in the thinking as to what constructs do we use, right? And what facilitation can be done in various markets for this. I think that's important.
Thank you, Srini, for your answer. I believe we've reached the time for questions at this stage. So I would like to thank Srini for being part of this panel discussion, and of course our previous speakers. It was a rich discussion, and I hope everyone got some insights into this new reporting landscape and how Europe is leading the way from what the previous speakers have shared with us. Now, I would like to conclude this session by sharing with you a couple of some of the insights we've shared now in this session. We had a really rich discussion. We've touched upon many different elements regarding CSRD and the European reporting standards. However, I would like to highlight the fact of double materiality and the importance of having a double materiality integrated in your company's operations, and also what it really means for your own purpose as an organization, not just about your profit making, but also about your impact on society and environment. We've also heard about the harmonization element and, of course, the digitalization element, as Maria mentioned with us. We believe also at CSR Europe, it's really important to understand, first of all, in which business you are in, and try to manage and measure your own data in order to improve also your reporting exercise, but also the right message for your external stakeholders. Now, we've also heard a lot about sector-specific standards, and that's what we think it could really take this reporting landscaping to the next level, give the chance to all sectors and different organizations to find a more equal opportunity to measure and report on their own businesses, and of course for investors and other stakeholders to have a better overview in a more comparable and consistent manner. Now at CSR Europe, what we try to always do is to support our members, but also of course non-member organizations in this reporting area, and that is why we continuously updating our organizations with different EU intelligence, but also insights from the development of the international standards, and of course the organization of webinars, but also interactive workshops where we try to bring experts on the field to share some more practical insights with our members and try to work together peer-to-peer into this network of organizations on how we can advance on this area. Now, we've heard a lot about the European financial reporting EFRAG and the co-construction of the European sustainability standards. We would like to remind you that CSR Europe is actively engaging with EFRAG through our representatives, such as Maria Alexiou, but also Giulia Genuarti, as part of our network. We are always advocating for a more harmonized and equal reporting framework, and that's what we would like to see in the future. Now, before we close this session, I would like to go through a couple of more information regarding the next sessions and the next steps that you can take. Now, if we can show the slides, as you can already see, we have prepared in the next days some session that relates to today, a session that is really about sustainable finance and also sustainability reporting. You can see and attend tomorrow the high level, of course, plenary session with the Commissioner McGuinness on the future of sustainable finance and how it will really evolve. And then, of course, tomorrow, another interesting session, European Roundtable session on transparency, and especially on tax transparency, which we believe is also part of the narrative, also of the sustainability reporting. As I believe Maria or Julia mentioned earlier, taxation should be part of this conversation, and that's why we have the pleasure to organize a session on it. And then, of course, on Thursday, you can attend another session on sustainable finance that will explore furthermore the topic. Now, I would also like to remind our participants that they can make the full use of the platform session. Just to remind everyone, the platform will remain open until the end of December. and you can find all recordings of all sessions on the platform. So it's easier for you to try to rewatch every session at your own convenience. And of course, feel free to network with other speakers, to network with other attendees, and create this sort of peer-to-peer dialogues. Of course, you can also get in contact with us, with CSR Europe, and all colleagues that work on different areas. And of course, you can do that through the platform. And most importantly, at the CSR Toolbox section on the platform, you can find our own services and areas that we engage in and try to support our organizations. And from there, you can also book some short calls with us to discuss our menu of tailored services that we offer, as I mentioned. And as you can also see from your screens, we offer a variety of services, starting from the very fundamental issues such as identifying your material topics, moving on towards to external verification from your external stakeholders. And of course, in the meantime, we offer more services regarding your sustainability report, as we've seen from today's discussion, the importance and the importance and the key message that a sustainability report can have on your communication to external stakeholders, but also your sustainability strategy in general. And that's where CSR Europe tries to support your organization in setting the roadmap and setting the right steps for the future. Now, with that being said, I think we're 2 minutes ahead of time, but I don't want to take more of your time. I would like to keep it short. Thank you again, everyone, for attending this session. It was a pleasure discussing this very interesting and evolving topic. Once again, thank you to Srini, Julia, and Maria for their contribution. And we hope to see you all in the next couple of days in the other aforementioned sessions. And I wish everyone a nice rest of your day. Goodbye.
Thanks, Pedros. It was a pleasure.